Hey everybody, Steve here. Just wanted to get a quick video out to everyone because today was kind of particularly ugly. So I want to talk to a couple things. First, I want to rewind the clock a couple years for those that have been with me for over the long term. You know, I did this during COVID, during the March 2020 sell-off and then the April 2020 spring back. We were doing videos pretty much every other day and I was sending them out. They were long-winded. I know they're about 20 minutes. I'm going to try to keep this below 10. But basically now I have a new format where I'm sending out the daily meetings in the morning. It's important that you kind of get those because that's where you can hear what I'm thinking. A lot of people want to know what I'm thinking during this time. I talked to a lot of clients today and I love talking to y'all. I like talking to you on good circumstances too. But I get it. So stuff's on your mind. I want it to be a one-stop shop as far as where to go. So the daily briefs, you know, Candace puts these out to your email. Allison does all the behind the scenes to get them out to the website. So boom, there the daily briefing is going to automatically be uploaded right to the website at all times. So, you know, that's where if you're like, I got to talk to Steve, do me the favor of maybe, you know, 8 to 10 minutes of your time of watching that video while you're waiting to talk to me, right? Because that's going to give you like 99% of what I'm thinking. And I make these videos entirely off of answering people's questions, right? So it's the questions I know are coming that I try to get ahead of with the videos. So, you know, today we talked to you, see right at the top there, bear market strategy. Absolutely. What are you doing right now? It's like, well, I did explain that the decisions of a bear market strategy are way earlier, right? There's only a couple things we're doing now, then we'll talk about that specifically. But I want to let you know that that's out there for you to partake of or not. I get it. Not everybody's a market junkie, if you will, wants all that information every day, but it's there and it's available. That's why I do it. And I want you to use it, certainly if you have questions on your mind. All right, as far as what the heck is going on in the market, this presentation, you know, I went back and if you remember, and I should have written a book and I still might turn it over to somebody to write a book on taking the videos that I made during the March 2020 timeframe, 35% sell off in a month. Looking back, I was one day early. I called the bottom one day early and it was the lock and load brief. That was the title of the slide. I did not use lock and load for this. I used a term that a client and a buddy of mine came up with today. And he said, stay calm, pass the ammo. So that's where we are. Stay calm, get the ammo ready, right? Another client today said, hey, should I send money in today or tomorrow? And I said, how about both? I don't know where the bottom's going to be. I don't have a crystal ball, but I do know, look at this chart. This is TD Ameritrade Think Pipes. This is a 1-year chart of the SPY, the S&P 500. Look where we are. So boom, over a year since we've been at this level. So now you back this chart out to like 5 years, you've made all kinds of money. If you're a lifelong investor, you understand it, you get it. However, for my newer type folks that have only been investing for a year, your account is likely down despite my best efforts. I mean, we've had some complete home runs, but this has been a sell everything type of market. And, you know, these happen. So the analogy that I use is if this is your first time seeing one of these, if you weren't with me in the March 2020 timeframe, yeah, I can see why this has you nervous. If you put a chunk of money, especially in January, it's a lot smaller now. Everything's selling off together. Stocks, bonds. The only real things that have been home runs are the credit space. And that's Blackstone, and that you have to be accredited and you have to do paperwork. KDUX is holding its own. Several of you are in that. The bonds, though, I mean, just selling off a lot less than the equities, but still selling off, right? That diversified 60-40 portfolio, you know, I don't believe in that. That's why I don't do it. I use a core and satellite approach to manage the risk, but nothing is going up, right? But I do think when you look at this chart, I think we are at the point where we bottom this week. Yeah, we really do. We've busted down below. You know, I bought the dip here, said it's time to buy, bought the dip here, said it's time to buy, bought the dip here, was right for a while, then wrong, right? So we did bust through 400. I think that was kind of a magic level in the SPY. We're below that. And from a chartist perspective, if you're a technical person, when things break below all resistance, they tend to free fall. And that's what we saw today. We saw the technical free fall. If you saw all over CNBC today, it's just like, The technical folks out there that aren't looking at the fundamentals, they're only looking at charts, are watch out below, right? There's nothing to support the buying here. Just collectively, all the, people that manage capital for a living will support the buying, and they'll come in eventually. And I think they come in this week, because when you look at the selling, it's akin to the selling we saw in a global pandemic. It is akin to the selling we saw in the global financial crisis, where financial firms were on their knees and needed a government bailout. We're not near any of those two situations. We're just a little bit panicky, and we've gone like taken this sensitive mode and cranked it up, way too high. I mean, 2015, we tried to raise interest rates, the market dropped. We stopped it and the market went higher. 2018, exact same thing, 20% a month, December 2018. So we've seen this movie. So the analogy that I use, I get it, and I'm not making fun, or I'm just making a point, is that when you're a little kid, you don't have any experience with thunderstorms. So when you're in your house, the safest place you've ever known for most people, and a thunderstorm rolls through, you're scared, right? It's a significant emotional event in your life. However, as you age and as you experience more of these thunderstorms, the more you go, you know what? These things happen. It's going to roll through. It always does. It always sucks just as bad when it's here. Lifelong investor. I've seen this. Let's go back to 87, right? I'm old enough to have experienced that as a brand new, fresh investor. But they pass, and then the market goes back higher. So unless you're really, if you think it's the end of America, well, we got other problems if you think America is just like ending, right? But no, this is not a pandemic. This is not a global financial crisis. You could call housing a bubble even. I know I'm not allowed to say that. I'm supposed to say houses are supposed to go up forever and blah, blah, blah. They don't. They do bubble. It's been ridiculous. So just, consider that if you are switching in out of equities because they're cheap, and buying real estate because it's super expensive, you are doing that kind of buy high, sell low, like, the things people talk about, that's 180 out from what you should be doing, or take advantage of all the money you've made in real estate and take advantage of low stock prices. So people think about it, differently, but I do want to offer that example. The more thunderstorms you experience, the more you can now take your experience and tell others like, hey, it's ugly, it's scary right now, but you know what? They happen. And that's why you use the bear market strategy. You make the decisions going in, and you kind of have to grin and bear it, honestly, through it a little bit. So I want to talk about that real quick. So what are we doing right here? Well, look at where we are. I don't use technicals, but I do like to show this chart because people believe the RSI is down below 40, right? So, down at 33, did get down to 30. It's, complex indicator, but measures rate of drop. Obviously, this rate of drop right there was bigger than the one we've had. We did have a big 4% update right after the Fed raised rates, which I thought marked the bottom. It did not. Steve gets to be wrong, and off we sell, right? But I'm calling it's this week, right? I know for sure if we sell off another 4% tomorrow, then we're done. We're done selling, right? Because we've gone from like stupid to ultra stupid. So it's almost easier from a capital management point if you do get ultra stupid, because then it's just a clear buy. If you're semi stupid, well, then it's tough to, okay, are we going to get ultra stupid, or are we going to wise up and have the market go back to doing its thing? So you got the RSI down here, you got the MACD way down in the dirt. That's all I'll say about those, is those are typical buy indicators. You do have a free fall and broken resistance chart though. So what do I think is going to happen? Let's take a look at the tape from today and recap. Yeah, bloody selling, and it was pretty much all day. So share, there we go. All right, over to here. Here's where we were today. Again, I'm tech heavy. Even in the core satellite approach, most of the core is tech. You can probably tell I'm in a hotel room and not at home in my home studio. I'm in Scottsdale at a risk conference to transition my core and satellite approach, the core portion, over to some risk-based models. So if you are sitting at home going, never again, do I want to have this happen in my portfolio because you're close to retirement, or you just don't like the that's not who you are as a person. I'm going to have answers for that as of this week. The answers I developed, I didn't like. Let's, kind of let some professionals do this, who do the exact risk management of the core portion. And then we'll have our stuff, my, best of breed change in the world type companies, individual stocks off to the side. That'll be the satellite. So if you don't want any part of that, you want to stay all, you know, the young guns off to the right. That's where I am with my own money, and that's where I'll stay because I believe in it. But I do get it that not everybody is at the, you know, fairly super aggressive level. So I'll be able to offer that to everybody. But here's where we are with the numbers today: 4% in the NASDAQ. That takes what, the NASDAQ down to 27% maybe if this updated. 1 year change 15. What are we looking at? Well, that's just not right. So I must be on the wrong chart. NASDAQ, QQQ. Why is it saying 15? It was 23 this morning and we would drop 24 today. So here it is, year to date change. So we're down 25.71. I'm sorry, I was looking at, that's 1 year. My bad. So yeah, 25%. So are we going to 30? No, we're not going to 30. Right. So we're in that bathtub, and you don't try to call the exact bottom. You try to call the bathtub. We're in that bathtub of buying. So that's why I think you'll see the market in the green tomorrow. But let's talk about how not yet. Right. So pre-market was all red here in a minute. That's a terrible chart. So let's pull up a different one. There's your pre-market, just barely in the red. I think that flips green. And then we start going back higher. So what indicators do I use that are specific to money managers? And you may think this is kind of funny, but it is a fact, is when clients roll over and cash, that marks the bottom. I saw that, you know, I had less clients in 2020. I built a huge book of clients from the 2020 experience, actually. But I had 2 clients in March of 2020, rolled over. One was, you know, just couldn't take any more losses. We're not doing this. One was super aggressive, kept adding risk against my advice. And then basically locked in some huge losses against my advice, and haven't heard from him since. So hopefully the day after he talked to me and cashed out, he cashed right back in, because it was the next day that he went screaming higher. So I lost a client today, cashed out. Okay, talk to a few more on the edge. I wouldn't be surprised if we continue selling, lose a couple more this week. That to me is when I hear my clients say, you know, I've kind of like the 3 clients, the ho-hum, got it. I've been doing this for 40 years. So May of 2022 is not a factor for me. It's like, this is dumb. Turn off CNBC and back to work. So then there's I am about to take my account to cash because I don't want to lose anymore. Right? Which to me says I want to take temporary losses and make them permanent. People don't like when I use that language, but that's what you're doing. But yeah, there's the people that are just like, I need to cash. And I will say this: if you need to cash, you're not doing it for mathematic, you know, investing reasons, because you would be buying more, right? I do have people that have monthly allotments going in, and they've canceled them because stocks are too cheap. They'd be picking up too many shares if they kept that money going in. No, see, that's sarcasm. But no, you would want to increase the money you put in during this time, right? So kind of thinking like an investor, not like, you know, not letting the emotions get the better of you. But the second one, I said the ones that are about out, they're going to pull their accounts. I got it. When you have a big fish roll over for the pain, you know you're at the bottom, because inevitably it's that person who, so for some reason they go to cash and then the market reverses. And then the third one is it's time to buy. And those folks have been like, okay, is it time to buy? Well, yes, but we're not at the lock and load. And we're still, I think we're 1 day from lock and load. We'll see. So this is the stay calm, you know, pass the ammo, sort of get ready for it speech. But yeah, that's what I wanted to cover with you guys. I didn't cover everything, but I wanted to keep it at least somewhat short. If you have questions, do reach out to me. I still want that. I'm not trying to say don't reach out, but if you need to talk to me, then text, email, whatever. We can all talk on the same day. I can talk to everybody tomorrow if you want. But I do provide this as kind of a, hey, if you want to know what I'm going to say, it's already on video. You can already see it. So it's again a pleasure to serve you guys. Obviously, times like these are the ones that, you know, I use an airline pilot analogy of a lot of times they're overpaid when nothing happens and they sit there and fly the plane, or okay, the autopilot flies the plane, right? You know, they don't really earn their money, but when they really earn their money in spades is when things don't go well. right? That's when you want to make sure you have the right person. To a certain extent, financial advisor, it's when the crap hits the fan, you need somebody who's putting out videos, somebody who's willing to take your call, somebody who's sitting there staring at it like a hawk and trying to figure out, okay, what are we going to do next? And I promised you a little bit of what we're doing next. We're holding best of breed. We're not selling Apple, Google, Amazon. You know that Apple or Amazon and Google have the 24 split coming up. That's going to be like a 20 to 30% move, a gain after that split, right? And they're ridiculously cheap. I don't care that you're down money. If you just bought them, doesn't matter. We're buying more and we want that split. Apple, $150. What are you talking about? That's crazy. There's some great opportunities out there. So that's what you're going to see. We're also buying some other things. But what you might see is, and I haven't done this yet, but we're looking at it this week. It's a project that I have Jaden working on, is looking at the bonds. And if your risk tolerance supports it, selling some bonds to be able to put fresh money into equities. So that's going to adjust your risk tolerance a little bit. So I have to make sure it meets our contract that you have. But if you're aggressive, then boom, I can just do that. So that for some of you, that puts another, fresh 10K, fresh 100K for bond money down into equities. And that's what we'll continue to do. If we start hitting the 30% off, 30% down point, then yeah, that's a no-brainer. We're just going to load up. So anyhow, I'll leave you with that. Thank you so much for listening. Again, pleasure to serve you guys. And we will talk to you in the morning when I have my next video out. You have a good one. Bye.